right, folks, our last exciting video on comprehensive income. You ready? The other reporting issues, starting with puffy items, have to be reported. Now, in the prior example, the last video I showed you, each of the puffy items, we only had the U and the F, were separately reported, and they were already reported net of tax. But another way of doing it is kind of more like an income statement, where you have your items gross before tax. Then we accumulate all of those earnings, gains or losses before tax. And then in one line item, we have income tax expense. Okay. You could do it that way as well. So either way is acceptable. So each of the puffy items could be shown net of tax, or each of the puffy items could be shown before their related tax effects. And then we'll have one amount shown for the aggregate, probably income tax expense or benefit, but it depends. If you have a lot of gains, then you'll have an expense, right? If you have a lot of losses and you're able to deduct those, then you have a tax benefit, all right? So two ways of presenting it. Now, the income tax expense or benefit, folks, has to be either on the face of the financial statement or the notes. So as soon as you see comprehensive income, the income tax expense, is that a required disclosure? Yes. And it's either got to be on the face of the financial statement or the notes. The key is to take that income tax expense if you had a lot of gains, or benefit if you had a lot of losses. It's got to be allocated to each of the puffy components, okay? And the allocation of that tax expense or tax benefit, that has to be disclosed. Again, you have an option, either on the face of the financial statement or in the notes, all right? So it's up to you where you want to do it. Do we have to do interim reporting for comprehensive income? The answer is yes. We have quarterly reporting requirements, right? If you're publicly traded. So look, interim financial report, this is part of a full set of financial statements. Yes, it's got to be reported in the condensed financial statements for interim periods, quarterly, whatever. Comprehensive income has to be done. Absolutely. Now, the required disclosures, be very familiar with this. All formats have to disclose the tax effects as we've already mentioned, for each component of comprehensive income. So the tax effects, if you have a P, a U, the F, the I want that allocated to each of those components. Now, where you do that allocation could either be right there on the face of the statement of comprehensive income, or what's your other option? The notes. Now, I also want to see changes in accumulated balances for each of the puffy components, okay? So remember, on the balance sheet, we've got the accumulated other comprehensive income. Now, you might have current year pension items, prior year pension items. Well, that means we have a change in that accumulated balance. You might have had unrealized gains and losses on available for sale in prior years, as well as the current year. Well, I want to see the changes in those accumulated balances. And sometimes you might have a change in a balance, even if in the current year you didn't have a gain or loss. How could you have a change in the balance if in the current year you didn't have a gain or loss? Remember those reclassification adjustments? We might have had a gain or loss from a prior year that's in our accumulated other comprehensive income account, let's say for the pensions, that's now getting amortized, and now it's going to go on the income statement. Well, even though we didn't have a current year pension adjustment, we're still going to have a change in the accumulated balance, but this time it would be due to what? A reclassification adjustment. A gain or loss that previously went direct to equity, we're going to reverse out, because that gain or loss, little by little, is going to make its way onto the income statement, then into retained earnings, then back into equity, okay? So the change in the accumulated balances by component, again, you have an option. You could either do it right there on the face of the financial statement, or you could separately disclose it in the notes, all right? So you have a lot of options there. Now, the total accumulated other comprehensive income, that's part of the balance sheet, that's part of stockholders' equity. So your stockholders' equity, you've got your paid-in capital, right? Your stated capital at par, and then you have your paid-in capital in excess of par. Then you have your earned capital, your ending retained earnings, as well as your ending accumulated other comprehensive income. And then if you have any treasury stock, right, that's contra equity, that'll reduce your stockholders' equity, right? But the accumulated other comprehensive income, just like a statement of retained earnings, you got your beginning balance, beginning accumulated OCI items, then plus or minus the current year puffy, then plus or minus any reclassification adjustments, and there's your ending accumulated other comprehensive income, which we know becomes part of our balance sheet. Now, I mentioned in an earlier video, why do we have these reclassification adjustments? What's the key to remember? to avoid double counting. The accounting rules may have said, hey, this gain or loss for right now, we don't want it on the income statement for whatever reason. We want it direct to equity. Gain will make equity go up, a loss will make equity go down. Then the accounting rules say, well, okay, now it's allowed to have that gain or loss on the income statement. So any gain or loss that previously went to equity, you got to reverse out. If it was a gain, we're going to subtract it out. If it was a loss, we'll add it back. Then get that gain or loss as appropriate on the income statement into retained earnings, then back into equity. But reclassification adjustments in a multiple choice avoids what? Double counting. Now, we've got required disclosures. The changes in accumulated other comprehensive income balances for each of the puffy items have to be shown. We want to see why that balance for the P, the U, the F, or I changed. Was it due to a current year gain or loss, or was it due to a reclassification adjustment? It could go up or down, the balance for the P, the U, the F, or I, for one of two reasons, either a current year gain or loss, or we reclassified it, all righty? Now, anytime we have a reclassification adjustment that is considered material, it's significant. Well, we want to talk about that. Where, again, we have a lot of options. On the exam, it's easy. With that disclosure, if a significant item is going to be reclassified out of accumulated OCI, disclose that either on the face or in the notes, okay? So all these disclosures, you got a major theme, face of the notes. Now, the OCI gains and losses, we saw in an earlier video, we showed you one way of presenting those OCI items, whether it was a single statement or two statement approach. When we got to the other comprehensive income, we showed you each item net of tax. That was our example. Or each of those puffy gains or losses that year could be accumulated. Then we get the gain or loss before tax, right? Then you would show one line item for the tax effects, and then you'd have it net of tax. So you could do it that way. Either way is acceptable. But ultimately, I've got to see the tax effects for each component. I have to see it allocated, the tax effects for each component of puffy, either, again, where? In the face of the financial statement or in the notes. You got that option. Excellent example here. Before we take a look at the detail with all the numbers, really look what's going on. First of all, we're going to show this rather than on the face of the statement of comprehensive income. Where are we choosing to do it? The notes, which is acceptable. This is the changes to the accumulated other comprehensive income. Now, forget the numbers for a second. Just what would be on top horizontally? The P, the U, the F, the I. So any pensions, any unrealized gains and losses, foreign currency, or instrument-specific credit risk, okay? Changing the value of those liabilities. We're marking them to market. So we got the puffy on top horizontally. For each of those items, what do we want to show the world vertically? Well, what was your beginning balance? Then plus or minus any current year gains or losses for the P, the U, the F, or I, plus or minus any reclassification adjustments for the P, the U, the F, the I, and then the ending balance for each and every category, the P, the U, the F, the I, all right? So that's what we have here. So notice that this is for the year ended, okay, for the period ended. The change, right, is happening throughout the year. So the statement of changes in accumulated other comprehensive income is for the period ended. So this could either be in the face or the notes here. We're choosing to do it in the notes. So we only have two items. We've got cash flow hedges, okay, unrealized gains and losses, cash flow hedges, and we have foreign currency items, the UVF. So we've got the top, we've got those. Now we have the beginning balance, 2 and 4, and then we total it. Then we have, reclassification adjustments. Other comprehensive income before reclassification. So these are our current year OCI items. So we had a $3,000 for the hedges, we had a $1,500 for the foreign currency. Then we've got the amounts reclassified. Okay, $500 for the cash flow hedges, nothing for the foreign currency. Then we have the ending balances, $4,500, $5,500, and that $10,000, that ending balance would be shown where? Part of stockholders' equity, okay? So that ending balance for accumulated other comprehensive income is part of our earned capital, all right, that $10,000. Now, all these amounts here are shown what? Net of tax. They're all shown net of tax. So somewhere else, either on the face of the notes, the tax effects for the U and the F would have to be allocated, okay? So whether you do that in the face or the notes, whatever. What I want to focus in on is the amount reclassified. I mentioned on a prior slide, if you have significant reclassification adjustments like that $500, Now, we're saying that's significant. We're going to say that's material. They would have to tell you that. You wouldn't know that in the abstract. They'd have to tell you it's significant. Well, then we want a separate disclosure. Explain, well, what happened? Why did that get reclassified? So that's what our next item is about. So we got the name of the company. Again, this is in the notes to the financial statements. These are the significant reclassification adjustments that show us how we got the 500 that is going to come out of accumulated other comprehensive income because we want to get it on the income statement. So there were two items that happened that got reclassified. We had interest rate contracts for $3,000. We had commodity contracts for $3,750. Okay, so we net that out. That's $750. Then net of your tax effect, $250. That's where we got the 500, and that's the total that's going to be reclassified. Okay, so sometimes if the amount is significant, that 500 on the prior financial statement, which I'll put back up now, that 500 could have a separate disclosure if in fact it's significant. All righty. So you know what? The best way now to tackle the comprehensive income is to work multiple choice. I would also suggest make a little flashcard so you could keep it all straight. OCI, gains and losses that year for the puffy, right? Then you've got CI, comprehensive income, which is the sum of net income per your income statement plus the current year OCI items, the current year puffy. Then you've got your accumulated other comprehensive income items, which you see on the balance sheet. You've got your beginning balance for that, plus or minus the current year gains and losses for the puffy, plus or minus the current year reclassifications. Then you have your ending balance for the P, the U, the F, the I, total it up. That becomes part of your balance sheet, all right? Your ending part of your ending stockholders' equity. So I could keep going on and on, as I love this stuff, as you could tell. But I think it's time to let you go, unfortunately. Try some multiple choice. You make your silly mistakes, correct it, you'll be in great shape. And remember, everything gets disclosed either on the face or the notes, all right? Lots of options. See you later, guys. Good luck.